Hi friends, welcome to today's session. This is a very important and an interesting session regarding derivative indicators. तो हम लोग 1-2 मिनट रुकते हैं. काफ़ी सारे हमारे दोस्त लोग अभी भी ज्वाइन हो रहे हैं सेशन में. So we'll just wait a minute or so and we'll start with the session. Yeah, without wasting any further time, let's get started with the session. तो आज का सेशन जो है डेरिवेटिव इंडिकेटर्स के ऊपर है. So these are the broad topics that we'll be covering in today's session. Open interest के बारे में. These are very important concepts. It may sound very simple, but having a clear understanding regarding these concepts is extremely important. And at the end of the session, we'll be having a Q&A. So anyone who has any doubts regarding any of these concepts can please feel free to ask. I have taken few examples as well, so it will help in understanding the concept in a much more simple and clean manner. So one by one, we'll cover few of the derivative indicators, and in the end, we'll cover the two most important option Greeks as well. For us, from a trading perspective, delta and theta are the two most important option Greeks. So इसके बारे में भी हम लोग briefly discuss करते हैं आज के session में. So these are the four main indicators. If you see, for anyone who's doing analysis of derivatives, it comes handy. See, this is not the only thing. ऐसा नहीं कि अगर इसको track किया तो आपके means you will be 100% successful in trading. But along with technical analysis, if you combine derivative data, it comes in handy, especially to understand where traders have built position, कौन से levels पे resistance बन रहा है, कौन से levels पे support बन रहा है. Sometimes what may happen is, even though technically the stock may be looking bearish, but due to heavy OI data, there may be support over there. Traders may have built short positions on the put side, indicating that there is a good amount of support level at that particular zone. So combining technical and derivative data comes in very handy for a regular trader who does derivative trading. And one by one, we'll be covering each of these concepts in today's session. So first, we'll understand open interest. Then we'll see option chain analysis. Then we'll take few examples how, when there is a sharp rally in the market, how option chain analysis comes handy to us. We'll also discuss quickly regarding put call ratio. Same, ये सब open interest के data के regarding ही है. Then we'll quickly discuss regarding volatility India VIX. How can you combine volatility India VIX and get an interpretation of the market. Along with that, लास्ट में हम लोग ऑप्शन ग्रीक्स के बारे में आज डिस्कस करेंगे. So hopefully everyone is aware of the concept of open interest, but before that, we'll just quickly brush up regarding this concept, because this is the most important concept. Open interest बनता कैसा है, what does it interpret it, and what is its significance in the market. But before that, you should understand how open interest is actually generated. So open interest, there is a difference between open interest and volume. Still, there are a lot of clients who may be confused regarding this particular concept. So today we'll clear this concept in a very simple manner. Open interest basically refers to the open positions which have been built up in the option side. So today we are basically discussing the open interest which is there in the futures, and then we'll see on the option chain. We'll discuss it regarding the options, what the OI is built up. See, so open interest is built only when fresh positions are built up. Otherwise, if an existing client is closing out his trade, that does not count on the open interest side for the options. It comes under volume. So volume can keep on increasing, but open interest, if the same trader is taking a position and then closing out his trade, the open interest will not increase. Only when a fresh trader enters and creates a fresh position which is existing at a particular point of time, that is a time when the open interest is set to increase. So suppose you take two traders, A and B. Suppose A wants to create fresh positions on Nifty. So he buys 4 lots of Nifty, 25,100 call option. And there is a trader who sells the 4 lots. So at that point of time, when two new traders come into the picture and a trade takes place, your open interest will increase by 4. So trader A has purchased 4 lots of Nifty. Trader B has sold 4 lots of Nifty. So now we have an open interest of 4. Two new traders come on Tuesday. Trader C buys 20 lots. Trader D sells 20 lot. So now we had 4 open interest positions already, and now we have a fresh 2 set of new traders come in and create fresh positions in the index. That's how our open interest comes to 24, जो पहले के 4 थे, plus the new set of traders who have come and created their positions. Now if on the next trading day trader A squares off, उसके पास 4 पोजीशन थे, he squares off 2 positions of his existing position with trader D. So D buys it because he has previously sold, and A sells it because he has previously bought. So the open interest comes down from 24 to 22. Likewise, when a new trader comes but an existing trader squares off his position, that time also the open interest will not increase. It is only when 2 set of fresh traders come into the picture, that is the time your open interest will actually be increasing. Or if the quantity, there is a difference in the quantity. So now if you see, there is a trader E who comes into the picture and he purchases fresh positions in the index, but an existing trader C who had previously purchased the lots is now squaring out or reducing his position. That's why the open interest will not reduce. But in each of these case scenarios, whenever a transaction happens and the open interest does not increase, the volume side will keep on increasing, because every trade that happens, each buy and sell that happens gets reflected in volume, but it will not get reflected in the open interest. So you many times you may see that the open interest is relatively within a range, means it is hovering around 100 200, because traders are buying, they're squaring off their position, but constantly your volume will keep on increasing because every trade gets reflected on the volume side. So that is the major difference between open interest and volume. Open interest trades can keep on happening, but the open interest can remain constant, but the volume will always keep on increasing because it gets reflected. So open interest basic understanding is, it is the total number of outstanding contracts, the long or short, that are held or not closed by the market participants at the end of the day. So now if you look at the open interest data either on the futures side or on the option side, these are basically indicating that these are the positions which are currently open in the market and have not been closed. During the day also you may see the open interest increasing or decreasing. It's that at that point of time traders are having that many positions open in the market. It is used to confirm the trend or trend reversal in the future contracts. Mostly it is analyzed from a seller's perspective. So why is it analyzed from a seller's perspective? That is also very important to understand. See, to create a contract, that is in options specifically, to create a sell position on the option side, you require significantly higher margin. अगर आपको ऑप्शन बाय करना है, you just have to pay the contract lot into the premium. तो प्रीमियम अगर 100 है और लॉट साइज 75 है निफ्टी का, you are basically paying 7,500. बट टू क्रिएट अ शॉर्ट पोजीशन, इधर कॉल को अगर आपको शॉर्ट करना है या पुट को अगर आपको शॉर्ट करना है, the margin required is significantly higher. It is almost equal to the amount required for a futures contract. So that is why always the open interest data is analyzed. That is either call side का जो भी data है, wherever there is significant call open interest, it is considered as resistance because they are selling calls. And from the put side, if there is significant Y build up at a particular level, it is taken as support level for the market, because that is taken as put writing, not as put buying. So I hope everyone is clear with why it is important to understand the options data always from a seller's perspective. That is because option selling requires significantly higher capital, and it is assumed that traders who have significantly higher capital are the slightly bigger institutions in the market, and they have a better knowledge of the market. This is what is assumed. But you can always, the option buyers can always make use of this particular data and trade in the direction, in that particular direction in the market. So we'll take a few examples that whenever traders who have done heavy option selling, and when they get trapped on the wrong side, why does the market move in an extremely fast and swift manner? So this is just a simple understanding of few strategies that traders can consider in the market. So suppose there is a flat opening, अगर एक flat opening होता है और उसके बाद minor call writing चालू हो जाता है, लेकिन there is aggressive put writing, that basically indicates that the trend for the day could be bullish. Traders को लग रहा है कि भले एक flat open हुआ है, there could be momentum in the market as the day progresses, and that is why they do aggressive put writing. So when this happens, अगर आप कोई भी strike price, नजदीक के strike price को analyze करो, if you see there is aggressive put writing, what you can do from a strategy perspective is whenever there is any dip in the market, you can consider to take long positions rather than shorting the market. So you will understand, if you are a regular trader, you will understand by the basic price action of the index itself whether there is extensive selling taking place or the dips are being bought into. So जो भी scalpers है market में, who have been regularly tracking the index movement, you basically understand by the price action also that whenever there is any sharp correction, there is a pullback which is expected. So next is, if there is a flat opening and there is aggressive call writing, it basically means that traders are expecting that the markets to remain relatively range bound and to correct on the downside. So that is also a scenario, like today's scenario. Even though the markets opened relatively flat, there was aggressive call writing which was seen in 25,100 as well as 25,200 strike prices, indicating that ऊपर के डायरेक्शन में there was relative upside which was expected in the market in trade today. So whenever the markets witnessed positive price action, selling pressure came into the picture. Last two are simple. Whenever there is a gap up opening also, and then also there is aggressive put writing, that means traders are expecting the trend to continue on the positive side. So that is also very good indication. See, many times you may get confused कि gap up होने के बाद, as a day trader, it is very challenging. It does not mean कि many times you may see that Nifty is 200 points up for the day at the close, but that does not mean that you have got 200 points to trade in the market. A Nifty might have opened 150 points up itself. Post that, there might be just 50 points to trade on a day-to-day basis. So to get an understanding कि आज market में momentum रह सकता है या नहीं रह सकता है, for that you can definitely make use of the derivative data, which indicates that post the gap up opening also whether there is aggressive put writing taking place at the higher strike prices, which indicates that the trend to continue for the market on the upside, or post the gap up opening whether there is aggressive call writing, which is indicating that the gap up is limited and there could be a bit of selling pressure which could come about. So it is important to analyze this particular data along with price action. If you analyze derivative data on a constant basis, you will be a much better trader from a trading or scalping perspective. Now coming to understanding open interest for stocks. See, it is not just understanding open interest कि आज OI बढ़ा है और price बढ़ा है. You should see the prior trend also of that particular counter. So suppose a stock gives a fresh breakout and the price increases and the OI increases, it means that traders are creating fresh long positions in the counter. तो इसे long built up कहते हैं. But do note that whenever we are tracking data, it is important to understand the prior trend and see what is the prior OI data as well. It is not just about that particular day. You should see the prior trend for the stock. You should understand the trend, and only then you will come to know. For long built up and short built up, you will understand it clearly. But for long unwinding and short covering in the market, you definitely have to track the previous data as well. So long position, whenever the stock goes up and the OI goes up, it basically means market में long positions built up हो रहा है. Suppose the stock gives a breakdown and the OI increases, it basically means fresh short positions are being created in the market. Now coming to the two other ones, that is long unwinding and short covering. Short covering basically means previously there were short positions which were built up. The trend was on the negative side. Traders had created short positions. The open interest was continuously increasing when the price was rising. Now, on one particular day, there is a sharp pullback in the opposite direction. So, traders who had created short positions are now closing out their short positions. So, that is what is basically meant by short covering. So, traders ने पहले पैसा बनाया है short side पे, and now they feel that there could be a slight reversal on the upside. So, they decide to close out their position on the profitable side, or they are in panic and they want to close out their position. So that is known as short covering when the price comes up and the OI reduces. So the prior trend is extremely important to understand. Rise in price followed by a decline in open interest. That is means traders who had previously created short positions are now panicking and now feel that the market or the particular stock can move on the upside, and that is why they consider to close out their short position. Likewise, similar is the case for long unwinding. Previously, traders who had created positions on the long side when the stock was gradually moving on the upside, traders ने उसके सामने long positions build up किए थे, and when there is a slight correction or a pullback in the market, traders who had previously built up long positions are now closing out their long positions. So that is known as long unwinding. So for long unwinding and short covering, you should track the prior trend of the market, and then you will get a good understanding whether what is happening in the particular counter. So if you understand especially short covering, it's a very powerful intraday tool to track. So it is basically understanding where traders are getting trapped on the wrong side, and you can make decent amount of trades if you get a good grip about understanding how short covering is coming in the market. So this there is a question from Nikhil Fresh. Long built up, the OI should be on the put side. This particular data which is there, it is regarding futures. It is not options data, because for options it becomes very difficult to interpret. For stocks or Nifty, if you analyze the future data, that is the future OI built up and the price action, it becomes relatively simple to decode in the market. It's not call OI or put OI which is being interpreted over here, because that could be either a seller or a buyer. It's very tough to tell. But if you interpret the futures data, the futures OI and the price action, it becomes relatively very simple to interpret. We'll be taking options data as well, but options data is mainly used from the option chain analysis perspective and to analyze where there is resistance, where there is support, rather than identifying long built up and short built up in the market. This is a particular piece of data that we regularly share. If you are on our Telegram channel, do join our Telegram channel. It's free, of course. There is no cost associated. We keep on sharing all our reports as well as interesting data points during the day as well. This is the 2 times during the day we share this particular data. Stocks where long built up is taking place along with the OI change, where there is short built up taking place, short covering, long unwinding. So for all the 4 parameters that is of OI data, we keep on sharing this data 2 times in the day, one at approximately 11:30 and the other time at around 2 o'clock in the afternoon. So it's shared on our Telegram channel. You can make use of this particular data to identify stocks. It's if you are using any software, this data should be available to you as well. So this is a very handy data which comes into picture for traders who are doing scalping basically. जो भी daily basis पे track कर रहे हैं market को, this data becomes really handy to identify which are the counters which are witnessing long built up, which are the counters witnessing short built up, where there is long unwinding, short covering taking place. All this data is very useful. Now coming to the option chain analysis. Now we are coming from futures to the OI which is there on the option side. So the OI for the index, that is Nifty or for any stock also, is very important to track. Whichever strike price there is heavy call writing, that is considered as resistance. I will show it with an example, so that time it will be much more clear. So now just take into picture that if you open the option chain for Nifty, 25,200 call will have significant OI and 25,000 put will have significant OI. Now let's go into the chart and see why traders might have built position at that particular level and what is their view of the market. So if you see 25,100, there will be equal distribution between call option sellers and put option sellers. But one strike higher, that is 25,200, there is relatively significant call writing, and in 25,000 strike, there is significant put writing. So now let's go and understand from the chart itself why there may be why that particular data must have been built. What are the traders expecting? So this is once again the same data. This is the previous one is the option chain. This is in the form of histogram, which is known as bars. So this becomes useful to understand कि daily भी कितना change हो रहा है. So during the day as well, if a strike had particular 40,000 contracts during the day, what is the change which is happening in that particular strike price is also very important to understand. So this is the same data. It's just that the data is interpreted in the form of histogram or bar type. So you understand which levels there will be resistance and which level there will be support. Do note that the most important thing is price action. Even the derivative traders build up their position according to the price action itself. But if you combine both of them, the price action and the open positions on the derivative side, we get a much better view of the market. That's all. So this is the current chart structure for Nifty. Nifty has been trading in an absolute range bound manner from the last 2.5-3 months. That is on the upside, you can see I have drawn a line. That line comes exactly close to 25,200 levels. So you can see the blue color line which is drawn in a horizontal manner. That is 25,200. Almost on 4 occasions, the index has witnessed resistance over there. On one occasion, it has given a breakout and we moved towards 25,600. But that was a failed breakout. We could not sustain at the higher levels. And once again, we came back into the range. On the downside, if you see, the level is closer towards 24,400. So that's a bit far away. But if you take tomorrow's expiry, कल का जो expiry है 16 September का जो expiry है, there the view is, because the index currently is at 25,100. So traders are once again expecting that the index will not surpass 25,200 by the expiry. So when you do call writing, it is the strike price that you are selecting to write plus the option premium. So suppose someone has sold 25,200 call option at an option premium of 100. The place from where he will start panicking is not 25,200, but it is 25,300. You have to add the premium to the strike price that you sell. That is for call option, because call option, the break even point is strike price plus premium. For put option, it is strike price minus premium. So only if Nifty crosses around 25,200, 250 levels, that time he will start panicking. So tomorrow we have the expiry. There is significant call writing in 25,200 strike price. If there is a significant gap up above the 25,200 levels, we could witness decent amount of short covering and the markets could continue the trend on the upside. But if we open or move towards 25,200 to 40, and once again we start facing resistance or a pullback, then it will clearly indicate that the call writers are still trying to get the market in their favor. Likewise, at 25,000 strike price, there is significant amount of put writing, which basically means that traders feel that by this expiry, why they are selling that, because we have the Fed meeting as well on Wednesday night. So that is the main trigger for the market. Markets are not going to go major direction, either upside, downside before the expiry. That is the general understanding of the market. Traders want to be relatively cautious before a large event like the Fed outcome. So till the time the Fed outcome comes, the outcome will come on Wednesday night, the impact of which will be seen in our markets in Thursday's trading session. But till that time, more or less, the markets are expected to remain on a sideways note. So that's why traders are selling 25,200 call option, and on the downside there is 25,200 put option, which is facing significant writing as well. So I hope everyone understands. Traders also look at key levels in the market where the index has faced resistance or a particular stock has faced resistance, and they select strike prices accordingly. So till now what we have discussed is maximum call open interest is equal to medium term resistance level. Maximum put open interest is the medium term support. Intraday where there is fresh call writing, it will be an intraday resistance level. And even in intraday, if there is, see, many times it's not necessary कि जो strike price highest है, that will be the intraday support or resistance, because there may be highest call writing at 25,500. That's from a slightly positional perspective, or 24,500. So those are positional support and resistance. But during the day as well, there may be key levels where there may be writing taking place, which will give you the intraday support and resistance levels for the market. So it's important to analyze the option chain and understand कि कौन से strike prices पे क्या हो रहा है. So this is a previous example. This is not a recent example. This had previously taken place in the market. But from an example perspective, I had saved this particular slide and kept to understand the power of short covering. So if you keep on tracking the derivative data, and on days when there is significant rally which comes about, see, when the days when markets are sideways, this derivative data may not come so handy because the index may be bouncing here and there within a very narrow range. But when a day comes when there is a major movement in the market and the traders get trapped on the wrong side, that time you should be analyzing this data and it comes very handy. So in this particular example, the index was trading closer towards 23,300 odd levels, and traders had built up short positions in all the major strike prices from 23,300 all the way towards 23,500. काफी सारे major call option के strike prices पे traders ने short positions बनाए थे. Now let us see on the chart what basically happened. So traders had a bearish view on the market. The trend of the Nifty was on the downside. So traders had built significant short positions in each of the major call options. So what happened, even though the trend was significantly down, on one particular trading day, the index rallied nearly 600 points in the opposite direction. So traders who had built short positions had to immediately cover out their positions, and that led to further short covering rally in the market. So this is the chart of what I'm talking about. You can clearly see that the index was in a constant downtrend, and then you can see one large candle. If you see the extreme right hand side of the chart, that is one large candle comes. That one large candle is almost 600 points in the index. So Nifty rallied from 23,350 odd levels all the way towards 24,000 mark on the upside. So traders who had held short positions from 23,300 towards 23,600, all of them had to clear out their short positions because they were trapped on the wrong side. And whenever in panic, whenever you close out your positions, you have to buy. It does not mean squaring off, does not mean just you close the position. You have to buy and then it gets squared off. You have to take a reverse trade to square off your position, which results in further rally in the market. And that's what caused the index to rally from 23,300 all the way towards 24,000 in just one single candlestick. So if you keep on tracking the data, you should know that where, if there is a significant rally, where traders can get trapped on the wrong side, and you can take benefit out of such short covering moves in the market. This is likewise a similar example on the downside. These are just examples, but to understand it, it is very important. So the trend was on the downside, but the index from 4 trading sessions was taking support closer towards its 200-day exponential moving average. So put option sellers had built up short positions expecting that the 200-day moving average will hold and the index can witness a bounce on the upside. But post 4 days of sideways consolidation, the index once again witnessed a correction on the downside. So now the put option sellers are trapped on the wrong side because they had built significant short positions on the put side. But when the markets continue the trend on the downside, that's when they get trapped. And you should understand that when traders are covering out their short position, it leads to further significant movement in the market. So this is an example where the put option sellers get trapped on the wrong side. The previous one was call option sellers getting trapped on the wrong side. So that is, if the market rallies on the upside, the call option sellers get trapped on the wrong side. अगर market में correction आ जाता है, if there is selling pressure, then the put option traders get trapped on the wrong side. So this is very important to understand कि कौन से traders कौन से positions build up करते हैं and at what point of time they get trapped in the market. It is important to understand, आपको चार्ट पैटर्न भी धीरे धीरे देखना है और OI का डेटा भी अंडरस्टैंड करना है, एंड यू शुड मेक एन अंडरस्टैंडिंग कि इस लेवल से इस नीचे आ जाता है तो व्हाट कैन build up the pressure or the selling pressure in the market. So now we come up to the another concept which is known as put call ratio. So put call ratio एक important indicator है जो बताता है कि कोई एक particular strike price पे ज्यादा कॉल ऑप्शन राइटिंग हो रहा है या पुट ऑप्शन राइटिंग हो रहा है. इट्स अ वेरी सिंपल इंडिकेटर टू अंडरस्टैंड एंड इट्स अ रेशियो, बेसिकली एक रेशियो है विच डिवाइड्स द पुट ओआई डिवाइडेड बाय द कॉल ओआई. आप एक पर्टिकुलर स्ट्राइक प्राइस के लिए ये कैलकुलेट कर सकते हो या फिर पूरा इंडेक्स का जितना भी स्ट्राइक प्राइसेस है यू कैन कैलकुलेट इट फॉर दैट. देयर इज नो हार्ड एंड फास्ट रूल. सम ट्रेडर्स डू इट फॉर द टॉप 4 स्ट्राइक प्राइसेस क्लोजेस्ट टू एट द मनी. जो एट द मनी स्ट्राइक प्राइसेस है उसके 4 ऊपर के 4 नीचे के स्ट्राइक प्राइसेस लेके दे बेसिकली कैलकुलेट द पुट कॉल रेशियो बिकॉज दैट इज द मोस्ट सिग्निफिकेंट डेटा. उसके अलावा जो बाहर के स्ट्राइक प्राइसेस है समटाइम्स इट में simply be that traders are building positions just to hedge out their positions on either the call side or the put side. But from a day trading perspective, even if you take the top 5-6 strike prices, that is good enough data because almost 80 to 90% of the OI will be concentrated within those 4-5 strike prices itself. So put call ratio is basically put ka OI divided by call ka OI. So if the put call ratio which is there is a very good understanding of whether the bulls have a stronger grip on the market or the bears have a stronger grip on the market. So this is the basic formula, total put OI divided by total call OI. Generally if it is between 0.9 to 1.1 it basically means कि market में एक sideways consolidation expected है. अगर ये value 7 के नीचे है it means it's a bearish scenario. Why it is a bearish scenario? Because there are more call option sellers in the market compared to put option sellers. Just understand how you will get a value less than 1. It is basically that the denominator is larger than the numerator and that's how you will get a value less than 1. So if the value is less than 0.7 it basically means that there is more call option selling compared to put option selling. इसका मतलब है traders का मंदी का view है. That's why you will have this particular figure. If the figure is more than 1.1, 1.2, it basically means that traders have a bullish view on the market and इसके कारण put option writing significantly higher है compared to call option writing, and that's the time when the numerator is larger than the denominator, that's the time we'll have a value more than 1. So that's the basic and simple interpretation of the PCR value. When the value is closer to 0.7 it is a bearish reading. When it is more than 1.1, 1.2 it is a bullish reading of the market. The same concept, the contrarian, it's known as a contrarian indicator. हमको ये particular data भी sellers perspective से ही देखना है. Basically we are interpreting put option का जो OI है it means they have a bullish view and call option का जो OI है it basically means a bearish view on the market. So you can make use of this data also. इसको अगर आप ग्राफ के तौर पे अगर प्लॉट करोगे पुट कॉल रेशियो का ग्राफ, basically means if the value is coming towards 0.7 and then we are seeing a reversal on the upside, that is the value from 0.7 is now gradually moving towards 1.2, it basically means call option sellers are closing their position and put option sellers are building up their position. Reversal is expected in the market. So that's also a very good reading. How you can interpret कि अगर कोई रिवर्सल आ रहा है this put call ratio number will not remain constant, it will also keep on changing with the direction of the market. So if the value goes from 1 to 1.5, anything on from lower value, if it moves towards the higher values, it means that there is more put writing which is taking place, or call writers are closing out their position. Likewise, if the value moves from 1 towards 0.45, 0.5, it means that call option sellers are increasing their positions. Whenever the denominator increases and numerator decreases, the value will come down. If the numerator is increasing and denominator is decreasing, this value will move on the upside. So it's a very simple mathematical calculation, but the interpretation is what which is very important to understand. Now coming to a very important concept, this is not regarding the derivative data per se, but it is very important towards understanding the option pricing and how the option movement happens. So anyone who's a regular day trader or scalper in the market should have a good understanding regarding option Greeks. So option Greeks, there are 5 option Greeks which are there in the market. We have delta, we have gamma, we have theta, we have vega, and we have rho. So we'll be discussing regarding 2 of them, that is delta and theta. The rest of them I'll just explain quickly, but these are the 2 main derivative indicators जो हर एक trader को जानना चाहिए. So delta basically tells you that if the index moves by 100 points, आपका option price कितने point से move होगा, that is what basically delta is telling you. So delta for at the money strike price generally will be 0.5. So if the index moves by 100 points, 25,100 जो at the money call option है, that will move by approximately 50 points on the upside. That is basic and simple understanding of delta. For every 1 point change in the index in the underlying, how much will your option price change by is what basically delta is telling us. Next we have gamma. Gamma is the second order derivative of delta. See, delta जो है वो एक static value नहीं है. It does not mean that as and when the market keeps on increasing आपका delta 0.5 पे ही रहेगा. वो 0.5 का 0.6 भी बन जाता है, 0.7 भी बन जाता है. The rate at which that 0.5 becomes 0.6, 0.7 is basically told by delta. Delta, that's why is known as a second order derivative. The rate of change of delta along with the market price action is what is known as gamma. The next is theta. Theta basically बताता है कि with each passing day, how much will your option price reduce by. Theta is a friend of the option seller. It's not a friend of the option buyer. Theta again works against an option buyer. It works in favor of an option seller. Then we have the concept of vega, जो volatility बताता है. So vega basically tells with the change in volatility, what is my option price change going to happen. तो कभी भी मार्केट में volatility जब बढ़ता है, even though the index may remain same, but जब भी volatility बढ़ जाता है in case of any major event के सामने, your option prices may increase at a much faster pace. So this is once again a friend of an option buyer. अगर आपने option buy किया है और उसके बाद volatility में increase आ जाता है, then it is definitely beneficial for you. The last is interest rates. Interest rates का कोई impact नहीं रहता है based on weekly options. Interest rate अगर बहुत ही बड़ा change आ जाता है, it will have change impact on long dated options जो 6 महीने का है, 1 साल का रहता है. वैसे के जो ऑप्शंस रहते हैं उस पे इम्पैक्ट गिरता है बिकॉज ऑफ इंटरेस्ट रेट चेंज. वीकली ऑप्शंस पे कोई इम्पैक्ट नहीं गिरता बिकॉज वीकली और मंथली विल नेवर हैव एनी इम्पैक्ट ड्यू टू इंटरेस्ट रेट चेंज ऑफ 25 basis points or even a 50 basis point will not have any major impact on the option prices. So we can completely eliminate the picture of interest rate for the weekly scenario. The two most important ones to focus on are, which is regularly when you are trading you should keep track of, is delta and theta. So now we'll go into a slightly deeper understanding of delta and theta. Example के साथ I will explain it so that the concept is much more clear. So these are all the हर एक strike price के लिए you will have all the 5 Greeks. You will have delta, gamma, vega, theta, and rho is not taken into consideration. The remaining 4 are always there. If you have any software, it will always be interpreted. So now first we'll go to delta. So currently the markets are at spot का देखना चाहिए because it's weekly expiry जो होता है happens based on the spot value, not on the future value. ऑप्शन का जो प्राइस एक्शन और चेंज जो होता है वो फ्यूचर के प्राइसेस पे निर्भर करता है, नॉट ऑन स्पॉट. वंस अगेन आई विल रिपीट इट इन अ वेरी सिंपल मैनर. आपका जो ऑप्शन प्राइस में फ्लक्चुएशन जो होता है वो फ्यूचर के प्राइसेस के चेंजेस पे होता है, बट जो सेटलमेंट जो बोलते हैं कि आपका अगर ऑप्शन जो आपने लिया है वेदर इट विल बी प्रॉफिटेबल और लॉस, you have to compare it with the spot level, not with the future level. So currently Nifty is at 25,100, that is the spot level. So 25,100 will be the at the money strike price. So 25,100 will have a delta of 0.5. तो जो मैंने horizontal जो मैंने box जो draw किया है that is at the money call option. So you can clearly see the delta of at the money call option being 0.51 and the put option is 0.49. So what it basically means is if Nifty moves by 100 points on the upside, 25,100 call option will move by minimum 51 points in our favor. And अगर नीचे आ जाता है 100 points, then 25,100 put option will move by a minimum of 49 points in our favor. Why I say minimum? Because as and when the markets move on the upside, that delta जो 0.5 का है, it will move from 0.5 towards 0.55, 0.6 on the upside. So hopefully we will get a much higher value change as and when the market moves in our favor. जो कॉल ऑप्शन जो रहता है उसका डेल्टा 0 से 1 के रेंज में रहता है. इट कैन बी बिटवीन 0 and 1. अलग अलग स्ट्राइक प्राइसेस का अगर आप देखोगे उसका हमेशा डेल्टा जो रहेगा इट विल बी बिटवीन 0 and 1. जो डीप इन द मनी कॉल ऑप्शंस रहते हैं उसका डेल्टा 1 रहता है. जो डीप आउट ऑफ द मनी कॉल ऑप्शंस रहते हैं, सो सपोज निफ्टी इज एट 25,100, अगर 26,000 का कल का एक्सपायरी का अगर कॉल ऑप्शन का डेल्टा देखोगे इट विल नॉट बी इवन 0.05. मतलब it is not even, it's a very small value. Basically it means that there is very less chance of that particular the index moving 1000 points in one single trading day. डेल्टा जो मैंने बहुत सारे सेशंस में कवर किया है, it is also a very good probability indicator as well. So what it basically simple में if anyone wants to understand, अगर 25,100 का डेल्टा जो 0.5 है, it basically means that there is 50% chance. ये theoretical है, it is not hard and fast, but it gives a very good understanding when you're doing trading. It basically means there is 50% chance that Nifty will close about 25,100 कल के expiry में. Likewise, there is 50% chance for 25,100 put option to close in the money by the time expiry comes. Now, if I tell कि 26,000 का delta जो है, it is 0.05. It means there is just 5% chance. इतना भी नहीं रहेगा. That the delta may be even smaller. I have not checked the delta, but the delta will be even smaller for 26,000 call option for tomorrow's expiry. So it basically means that there is a very less chance that in one single trading session the index could move from 25,100 towards 26,000 in one trading session. So there will be just 3 or 2% chance that the index may move by 1000 points in one trading. It can always happen. कोई बड़ा positive trigger आ जाता है. Markets can always witness a short covering rally on any major large position. But at present, during the current market scenario, based on the option Greeks and the current reading of the market, there is very less probability of a 1000 point rally in just one trading session without any major trigger. So delta is a very good indication of जो strike price जो आप select करते हो उसका क्या probability है of closing in the money by the time expiry comes. Likewise, now going to the next option Greek, that is theta. So theta value basically tells if the index remains at absolutely the same level. अगर कोई पॉइंट्स का चेंज नहीं होता है पूरे दिन के ट्रेडिंग सेशन में, अगर निफ्टी 25,100 पे खुलता है एंड पूरा दिन उसी लेवल पे ट्रेड होता है, by whatever is the theta value, by that much your option premium will decay with each passing day. तो अभी करंट वैल्यू है ऑलमोस्ट 22.5. So if the index opens at that level, absolutely that level, there will be a 22.5 point option premium erosion if the index remains absolutely stable at that particular level. So that's why we always tell theta is a friend of an option seller and it is an enemy of the option buyer. So if there is no movement in the market after opening, your option premium will erode for that particular day, and that is the benefit that the option seller gets. It's also known as the interest that the option seller charges for selling the option. जब भी theta value बड़ा रहता है, it means that the option seller is charging a higher interest to sell the option premium. So whenever बड़ा कोई major event रहता है, you will always see the theta component being extremely high. Intrinsic value cannot be, there cannot be a major difference in the intrinsic value, but theta can be different during different time periods. It's not always consistent because it depends on the option seller, whatever he's factoring the fear or volatility in the market, all that gets factored into theta. So जब भी मार्केट काफी वॉलेटाइल रहेगा, द थीटा वैल्यूज विल बी सिग्निफिकेंटली हायर. इट बेसिकली मींस कि अगर इंडेक्स उसी लेवल पे बंद होता है, by how much will be the option premium reduced by with each passing day. So this is a slide, a summary of the option Greeks. Delta जो है, it is basically interpreting direction of the market. Gamma is acceleration, जो गाड़ी को हम लोग accelerate करते हैं. So if gamma increases, that means basically your delta will move at a much faster speed. So you will get benefit. So theta is time value, vega is volatility. Delta is the most important that you have to track. And अगर आपने option buy किया है और उसके बाद gamma का effect आ जाता है, then your trade is bound to go on the favorable side. तो जब भी आपने ऑप्शन बाई किया, सपोज उसका डेल्टा 0.6 था और मार्केट में एक अच्छा मूव आ जाता है, along with that there is a gamma acceleration जो हम लोग बोलते हैं, जो डेल्टा 0.6 से 0.8 की तरफ जाता है, that time your option prices will move at a much faster clip and you will end up becoming on the profitable side. So that's an end of today's session. Thank you for having attended the session. So there was one question regarding the open interest. So I basically want to tell that जब भी नए दो traders आ जाते हैं and if they make a new trade, at that point of time your open interest will increase. If you have any other questions regarding any of the topics that we have covered, please feel free to ask your queries. It's for your own benefit only. So if so how frequently, there is a question from Dinesh, how frequently does the OI change in a day for a day trader to see and trade? Then whenever a short covering takes place, can you please show where and what big changes can I see in the options data? So I showed in one. So first I'll go step by step and then explain it. The most simple place where you can track this is the NSE website itself. NSE का जो option chain है, if you open it and you can track it, there is a 3-minute delay in the data which comes from NSE in terms of OI data. So the OI data, it's not a delay, the data itself comes after 3 minutes for any strike price. So if you take on a constant basis, this OI will keep on changing. Every 3 minutes, this OI data gets updated. So if the market starts at 9:15, by 9:18, you will get the first OI data for the market, whether what traders have built what positions in the market. By 9:18, you will get this particular data after 3 minutes. NSE keeps on sending this data every 3 minutes. It comes from the exchange itself, and you can clearly see it on the option chain. So I'll just go once again to the option chain. These are all examples where I had shown when there is a sharp move in the market, what happens. So this is how basically, this is from a software that I have taken the option chain, but the same data you will get on the NSE website as well, NSE option chain. On the extreme left hand side and the extreme right hand side, you will get the OI data. So the OI data for the call side is basically telling that where traders have created positions and where is the resistance for the market. The reason why I'm telling resistance is we have taken this data from the seller's perspective, we are interpreting it. So wherever there is heavy call writing, you will say that whenever there is heavy call writing, you will say that there is resistance at that particular mark, and whenever there is heavy put writing at any particular strike price, you will say that there is support at that particular level. So at the current juncture where we are currently, index is at 25,100. There is call writing which is there in 25,200 strike price. If you adjust the average premium at which these strike prices have been written at, it will be around 40 to 60. So you can say the resistance, actual resistance for the market is not 25,200, but 25,240 to 60 will be the actual resistance for the market. Likewise, support, if you take 25,000 as the highest strike price and we take the average premium at which this must have been written at again 50 to 60 rupees, then 24,950, 940 will be the actual support for the market. So sometimes you will just see that the markets may move a bit above a major strike price and once again come back into range. The reason for this is traders who have sold that particular strike price will continuously put pressure on the market and try to get the market within their favor. So you can see the option chain data on the NSE website itself. There is no fixed time that if you see it at 11 it will be helpful or at 1 o'clock it will be helpful. Continuous basis, as and when the market movement happens, this data gets reflected, and the market movement can come at any point of time. Market में कभी भी एक large movement आ सकता है. There is nothing in control of the day trader. But if you are regularly a day trader who's a scalper, then you have to be in front of the screen between 9:15 and 3:30. There is no one particular time where the market movement can come about. It can come about at any point of time, and you have to be constantly tracking this particular data. So there is another question, how to analyze gamma movement in the market. So there are softwares. We'll also be getting this data on soon. We'll be also having, if you make use of any derivative trading software, you will have the delta values, gamma values, theta values. All these values will be there for each of the individual strike prices. So whenever there is a movement in the market, and you can see the gamma value for that particular strike price, and when there is sharp movements which come about which causes panic, that is the time when you will see a sharp delta acceleration. So delta acceleration is what is gamma. So the rate of change of delta is basically known as gamma. It's very tough to predict when this actual movement can come about, but if you see gradually the gamma values are increasing as and when the markets are going on the positive side, you can track it that way. Do we have any other questions for the day? Yeah, if there are no questions, we can end the session. Thank you to all our friends for having taken the time out and having attended our session today. We'll be having constant sessions during the month of September on a lot of topics. So anyone who has interest, please feel free to join our sessions. It's for the benefit of all our friends itself. Thank you so much for having taken the time out today and having attended our session. Thank you. Yeah, so I'll just take one last question. There is a question from Sachin. If one important level crossed by market like 25,000, but still no movement in Nifty, how to trade such markets? See, There is a major event, like I mentioned, Fed meeting, which is there on this Wednesday. You have to take a lot of things into consideration. 25,000 definitely is a major strike price, but you have to analyze actually where there is resistance as well. Many times it will be one or two strike prices above or below the psychological mark. So it is not necessary that 25,000, just because the index has crossed that particular level. Now I'll just take the chart itself, current chart of Nifty, and explain it to you. So you can see over here, exactly 25,000 was not the resistance for the market. That is a particular level within the band. The band is 25,200 on the upside and 24,400 on the downside. So we have, from our view, we feel that if the markets are able to surpass 25,240, 260 levels and are able to hold on to that levels, then we can see a good move on the upside. So it's not necessary the absolute psychological level will be the support or resistance. Many times it is one or two strike prices above that particular mark. So currently for Nifty, 25,200, 250 is the resistance level. And if we get a move above that, we could see a 150, 200 point further rally in the market. Then once again, closer towards 25,000, 450, 25,500, we could face a bit of resistance on the upside, which is closer towards the previous swing where the markets had taken a bit of resistance. So Sachin, if I am, hopefully I'm able to clarify your doubt. Do not always track the major psychological level. See on the chart as well where the actual resistance or support is coming about for the market. Yeah, so with that, I'll end today's session. Thank you to all our friends for having taken the time out. Thank you.